If you are self-employed and subject to value-added tax, you must not only submit a VAT advance return once a year, but also submit value-added tax throughout the year. In this video, we will take a very close look at how you can easily handle everything with Selvdesk. But before we go to my screen, just a quick clarification. How often does this actually need to be done? You only need to submit value-added tax if you paid more than 2,000 euros in value-added tax in the previous year. For example, in the year 2025, you must submit value-added tax if you paid more than €2,000 in value-added tax to the tax office during the entire year of 2024. You will then need to send a VAT advance return to the tax office on a quarterly basis. So for the first quarter from January to March, you have time until April 10th, and for April to June, the second quarter, you have time. 10 days until July 10th, and from July to September, which is the third quarter, you have time until October 10th, and the fourth quarter runs from October to December. You must report this by January 10th. This applies to you if you paid over 2,000 euros in value-added tax in the previous year and under 7,500 euros. Or if you are a founder, because as a founder you don't have a previous year, you logically haven't paid any value-added tax in the previous year, but the tax office still holds you to a certain extent. With a short leash, you then have to submit a quarterly VAT advance return. If you paid over 7,500 euros in value-added tax to the tax office in the previous year, you have to do it monthly. So, you must send a value-added tax advance return to the tax office 10 days after the end of each month. For well-running self-employment, this is a topic you need to deal with monthly. Therefore, you should definitely have software that helps you with the whole process. It's simple. And a software that really makes it easy is Sevdesk. And that's exactly what we're going to take a look at now. I'll take you to the screen and we'll go through the process of submitting value-added tax together, discussing what you need to do to get this value-added tax to the tax office. We are on the homepage of Sevdesk, and here on the left side we see the menu where we find the item Taxes. We click on it and then we see VAT Advance Return. USTVA stands for VAT Advance Return. And then we can select the period for which we are doing this. If your period is the year, you do not submit any value-added tax at all. Then you simply complete the annual value-added tax declaration. Depending on your advance return period, which I just described, you either select the quarter or monthly option here. Let's assume that I do it monthly. It is October now, and I would like to submit the value-added tax for September. As you can see, there are already figures here. This means I have taxable value-added tax here. There are also some additional details regarding value-added tax and deductible input tax amounts. Now, let's briefly discuss how these figures are actually determined. And what do you have to consider in this case? The very basic explanation is first that you have certain value-added tax. This means you have issued invoices. Here you can see that in the month of September, I issued net invoices totaling 7,487 euros. And I added value-added tax in the amount of 1,124.10 euros. The customers then, of course, paid me the total amount, both the 7,500 euros and the 1,100 euros. So, they have arrived in my account, and I can deduct all the amounts that I have essentially paid to my service providers from that. This is the so-called input tax. Ultimately, this is also value-added tax, but it is the value-added tax that I received on the incoming invoices and then also paid further. We can expand this. And here we also see input tax amounts from invoices of other companies. This means I can claim this back. For example, this applies to train tickets, general purchases, travel expenses, etc. Wherever value-added tax was included, I can claim this value-added tax. Ultimately, it is the calculation that I make per month, or you might do it per quarter. I calculate the value-added tax I have received minus the value-added tax I have paid. And that is the amount I have to pay. Now let's take a closer look at how these two amounts or these two items actually come about. We start at the top with the value-added tax subject to taxation, because I often see a mistake there and a bit of confusion. And to be honest, there is often an error in the settings of many accounting programs. There is indeed a difference in when you have to pay this value-added tax. Basically, there are 2 points in time to consider. The performance date, which is usually the invoice date, and the payment date. So, when do you actually have to pay value-added tax? Is it when you have issued the invoice or when you have received the money? And this distinction is referred to as taxation based on agreed payments or similar arrangements. This is essentially the invoicing time, or based on received payments. This is essentially the money received in the bank account. Or should it be based on taxation, invoice date, or cash receipt date? And of course, it is always more advantageous for you to pay the tax only when you have the money already in your account. Otherwise, it may lead to you having to pay VAT, although you have not yet received the money from your customer. And that's why it should be in your interest to choose cash-based accounting whenever possible. You can always opt for cash-based accounting if your revenue in the previous year was below 800,000 euros. Admittedly, most businesses can choose cash-based accounting. This means that your tax amount will only appear here once you have actually received the money in your account. However, there are two things you should definitely pay attention to. The first point is that you need to set this up in the settings first. So let's do that. We go to Settings. We go to Accounting and Tax. There is the option for tax based on the accrual method and tax based on the cash method. If you have the option to choose the cash method, then you should select that option here. But that's not enough, because I see relatively often enough that people then do their accounting. This means they record all invoices, including the incoming invoice and the outgoing invoice, of course. And then, that's it. Then they handle the value-added tax. But if you have a tax calculation based on account movements, your accounting is only complete once you have recorded the incoming invoice, the outgoing invoice, and the bank account movements. Specifically, this means you should go to the bank once before you send a value-added tax submission. Then you will see the incoming payments. You need to link these payments to the invoice's expenses, so the value-added tax is calculated correctly when you are subject to cash-basis taxation. Otherwise, the whole thing won't be included in the calculation, and you might report an incorrect value-added tax amount to the tax office. So it's important to book the bank transactions, especially if under cash-basis taxation. And here you see it. The Tax Office Solutions GmbH transferred 5,150 euros. To me, the connection is already completed. That means I can take another look at the invoice here and say, interesting. It has been paid now. All good. Looks nice. And when you have linked everything here, it will also be correctly considered in the value-added tax. The situation is different with expenses, specifically with input tax amounts. The requirement is not you must have paid. You can claim the input tax as long as you have a proper invoice. And properly means that all invoice details must be included. This is the case with expenses that operate internationally. This is often not the case, as there is frequently no value-added tax included. Or in private purchases, you simply do not receive a proper invoice, and you also do not want to receive a proper invoice. Then you cannot book these amounts with value-added tax and claim them here. This means that only amounts from expenses for which you have a proper invoice can be considered, which is very, very important. Please note, in Section 14, it is listed what should be included on such an invoice. I will gladly link a checklist in my video description below, so you can always check the incoming invoices. You should generally only pay invoices if they are correct. That is, if they comply with German value-added tax law, because only then do you have the opportunity to deduct these costs. And if you want to check everything again, you can certainly do that by simply clicking on Documents, selecting the respective month, and now you can see here, for example, I have costs for rent, and I have the costs for the accounting program for Selvständige. By the way, if you say Selvständige looks really interesting, then click on the first link in the video description below where you can secure 50% off Selvständige. And then you can also do your VAT advance return the same way in the future. And here you can see the account management fees, and I have receipts for each of them. A document does not always have to be an invoice. It can be a rental agreement or a bank statement, as long as all the information required for it to be considered a correct invoice is present on that document. This means that if all the information that must be on an invoice is present on another document, such as a contract, then that document is also considered an invoice. And here's a little spoiler at this point. Starting in 2025, the obligation for e-invoicing will apply. It will take a little while before this is implemented. Starting in 2027 or 2028, it will become serious, but in the future, you will also need an electronic invoice to be able to claim the value-added tax amounts as input tax in the value-added tax. And then there may be certain specific positions and amounts in the VAT advance return. These are value-added taxes not subject to it. You do not have to pay any value-added tax for them, but they must be reported to the tax office so the tax office knows these value-added taxes exist. And these are, for example, value-added tax-exempt or non-value-added taxable revenues. In my very specific case, these are my AdSense earnings. So, I obviously have a YouTube channel. Ads play before and after videos, and I get a small share. I earn from Google. Google pays me this money, but Google is based in Ireland, and value-added tax must be paid on this value-added tax in Ireland. And Google essentially does that for me. For me, this is a revenue amounting to 2,351.16 euros. However, I do not have to pay any value-added tax on it, and this amount also appears on my VAT advance return, specifically here, 2,351.16 euros. However, I do not have to pay value-added tax for this because Google handles it all in Ireland. I still have to report the whole thing to the German tax office because the German tax office then reports it to Ireland, and Ireland can then verify whether Google has correctly paid the value-added tax for this revenue in Ireland. I have nothing further to do with this, but I need to record everything correctly here so that it is documented. This may sound like quite a bit of work up to this point. However, if you simply use Selvdesk continuously, write all your invoices through it, upload your expenses here, categorize them, and just link the bank books, meaning the transactions with the receipts, then that's basically it. Then everything is simply created automatically in parallel, and on the 10th of the month, you just go in here briefly, set up a VAT advance return, and take another look at it. And then you click on Create Value-Added Tax up here. You will receive an overview and can enter your tax number, name, and address of your company, meaning your information. You see the period, you see a very brief overview of what is actually reported to the tax office. In my case, it's ultimately just 5 numbers. And then I can click here and that's it. Sent. If you later want to trace what you actually reported to the tax office for September 2024, for example, when you prepare your annual value-added tax return next year and want to know what you reported back then, sometimes changes can also occur retroactively. If you receive an invoice that belongs to this month, you can simply examine it any time under value-added tax protocols and check what you had reported. It looks like this, meaning this is now the transmission protocol, and with that, your value-added tax is completed. This means you have taken care of everything for the accounting. Now there is one important point that you should take care of, namely the payment of money. Because with value-added tax, it is not like with a tax declaration where you receive a tax assessment. You basically have to transfer the amount of value-added tax to the tax office when you submit it. Either you have a direct debit mandate with the tax office, in which case the tax office will simply deduct the 968.21 euros, or you can transfer the entire amount. And importantly, you always have 10 days after a month to submit the VAT advance return and transfer the money. This means you should actually take care of the transfer right now. Otherwise, you risk being charged late fees. So just report it. Once, quickly log into online banking, transfer the amount, and then you won't have any more problems with it. I hope this short tutorial has indeed helped you and that you now have a clear understanding of how to handle value-added tax. If you say that Selvdesk looks quite nice, and as you can see, evidently the process is pretty simple with it. Yes, it is definitely easier than with Elster Online and similar services. Then take a look at the first link in the video description below where you can secure Selvdesk with a 50% discount. If you have any questions about value-added tax, Selvdesk, or any other inquiries on your mind, please leave a comment under this video. I would be happy and will make an effort in my response. Otherwise, feel free to check out Self-Dress here or just watch one of the other videos on this channel like this one or this one.